Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, could you please provide us an overview for the FX market in the past 24 hours?
Yeah, we had a strengthening of the US dollar, which more or less was characteristic. I would highlight, though, also a decisive weakening of the euro, and the euro weakened not only just against the US dollar, but also against the pound and the Swiss franc as well. So that was a sign of a broader weakness on behalf of the common currency. I would be noting that the drop may have been instigated also from a slowdown of Germany's preliminary HICP that was for June, which was not expected. The rate was expected to tick up, it didn't, it went down. So we may be discussing the possible peaking of inflationary pressures within the largest economy of the Eurozone. Moving on to Asia, I would be highlighting USD/JPY, which rose once again, reaching once again a 24-year high. So we are seeing a JPY which continues to remain weak. However, there was a stabilization at that level, so we may be seeing the pair correcting a little bit lower. Other than that, I would be noting the pound as a riskier asset, which dropped a little bit, but overall tended to remain relatively in a sideways motion. And maybe the CAD and the Aussia's commodity currencies.
And what about US stock markets?
Well, US stock markets sent some mixed signals yesterday. Actually, we had indexes like the Dow Jones, which edged just a little bit higher, while on the same time we had practically the S&P 500 and NASDAQ correcting substantially lower. I wouldn't say still substantial, but still lower. I would note, though, that the drop seemed to be extended for all three major indexes of US stock markets during today's Asian session. So overall, a cautious sentiment seems to be present, which could weaken US stock markets even further should it intensify.
Interesting. And how is gold moving?
Gold was dropped just a bit, but the main thing here is that on the one hand, it failed to capitalize on dropping US yields. At the same time, though, we have to note that the rise of the US dollar may have weighed on the precious metals prices somewhat, causing them to weaken, to drop even just a bit. That was for a third consecutive day. In the Asian session, gold dropped even further. So there are some bearish tendencies. They are slight, but they're building up. And we took good notice of them.
Nice. How are oil prices moving on the commodities front?
Oil prices yesterday dropped substantially. And that was against all odds, as we had practically EIA reporting a substantial drawdown, implying a rather tight US oil market. At the same time, though, we have increasing signals from OPEC that there is a difficulty in increasing production levels. Yet, nevertheless, we may see oil prices recovering some ground during today's European and especially the American session.
Peter, also tell us what are the main financial releases for the day?
Well, we have a rather heavy calendar. We have already had the European session, the European releases, most of them already out. Among them, we highlight that UK's GDP rate for Q1, the final rate was out, and it reaffirmed that it remained at 0.8% quote-unquote. That was the lowest level for over a year now. At the same time, in contrast to Germany's preliminary HICP rate for June, which decelerated, we had the French one, which accelerated. So we have here conflicting forces. On the one hand, we have Germany, where prices are slowing their rise, while at the same time in France, they're accelerating the rise. And we will have to wait and see how Eurozone's preliminary HICP rate will behave on a preliminary basis tomorrow. On the monetary front, I would be highlighting Riksbank's interest rate decision. That is already out. And the bank had decided to hike rates by 50 basis points, raising the interest rate to 0.75%. It was a decisive, hawkish move on behalf of the bank, which could practically start supporting the SEC in its relationship, especially with the euro, and to a lesser degree, maybe with the US dollar as well. Other than that, we move to the American session. We have from the US the consumption rate, which is expected to slow down and could weaken the US dollar, given that a slowdown of the consumption rate could practically imply also a slowdown of the retail sales growth rate. Also, I would be noting the release of the Fed's favored inflationary measure, the core PCE price index, which is expected to tick up, and another sign that on a month-to-month basis, inflationary pressures in the US economy are still rising. And we would also note the weekly initial jobless claims figure, which is expected to drop just a bit. It's a rather lukewarm financial release for the US employment market. Moving on now north of the border to Canada, we get the GDP rate for April, on a month-to-month basis, and is expected to slow down and could weaken the CAD. And during tomorrow's Asian session, we have a rather busy Asian session, especially from Japan. We get Tokyo's inflation measures. Now, the core rate of inflation for Tokyo is expected to accelerate. Should that be the case, we may see the core rate actually pushing higher, also the headline rate. And Tokyo, due to the density of the population, it's a megacity, could be the decisive factor before the nationwide release of the CPI rates. I would also be highlighting from Japan the Tangan indexes, and we have the Tangan Large Manufacturers Index, which is expected to drop just a bit, could weaken JPY. On the other hand, the Services Index, Tangan Index, is expected to rise and could provide some support. But the heavy point of the Japanese economy is definitely the manufacturing sector. So overall, the weakening of the index for Q2 is not exactly best news for JPY. Last but not least, after the release of the NBS manufacturing PMI figure from China, that was from June, and the rise which was reported, things are looking up for the Chinese manufacturing sector. And we highlight tomorrow in the Asian session the release of the Caixin manufacturing PMI is also expected to rise, and if so, would practically concur with the NBS manufacturing PMI and more or less validify the rise of economic activity in the crucial manufacturing sector of China.
And what about the monetary front?
On the monetary front, it's expected to be more or less rather quiet after ECB's central banking forum, which practically ended yesterday. Nevertheless, I would be noting ECB President Lagarde. She's about to talk in the American session. And I would be highlighting yesterday, the ECB President practically highlighted that the pre-pandemic era of low inflation seems to be over. And we are moving into a new era where inflation and the rise of prices is going to be more intense, and that central banks will have to readjust to this new macroeconomic environment. I would also note that the comments as such could be marking practically a fundamental shift for the bank towards tightening of its monetary policy. I wouldn't expect anything new in today's comments, but overall, I would expect a reaffirmation of the tightening intentions of the ECB.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation. What you have on your screens right now is practically the Nasdaq 4-hour chart. Note how we haven't revisited this chart for a long time, so I thought that it would be time to have a look. It's characteristic how the price action has moved decisively lower after signaling that the upward movement has fizzled out. It has broken the, let me adjust this, yeah, the 12,100 has broken also the 11,490 and is now aiming for lower grounds. That would be practically pushing us to find new support lines. But for the time being, let's revisit and revert this prior resistance lines into support lines. Sorry, prior support lines into resistance lines. Let's go hunting here. 1, 2. Moving on to the daily chart. Here you are. H4. So we have one visit here. You can see how there was a double touch at the, let's color this in green first, and it's the 10,680. Further back, have a look. Here we have another touch. Now from the two, one here and the one here, choose the lower one, and that would be the green 10,315. Let's readjust. Okay. Go a little bit higher. This could go a little bit lower. And this could go, okay, that's still valid. Let's keep this. Because we had a resistance line, a resistance touch here, and the support line touch here. Okay, seems to remain valid here. Let's keep this. At 115 point, sorry, 11,515. Let's correct the labels now. This would be placed at the 12,595. Come on. That should be 12,600. Could be going even a little bit lower here. Let's keep it here. You see the double touch here? That's interesting. And that would be the 12,550. 12,090 would be the second resistance line. 11,515, the first resistance line, which has been just broken. And then we have the S1 at 11,030. S2 at 10,600. Have a second look here. 680. 10,680. And the lowest one would be the 10,315. So there is an intense downward movement. Actually, a downward movement which intensified around the 28th of June. That was the day before yesterday. We tend to maintain a bias for a bearish outlook here, given that the RSI indicator is clearly aiming for the reading of 30. On the other hand, the price action in its drop has been approaching the lower boundary of the Bollinger Bands, which could be slowing down somewhat the drop for the bears. Yet overall, should the bearish sentiment continue to guide the index, we would expect it to reach, if not breach, the 11,030, a level which provided support on the 17th of June. It should not be underestimated. Lower than that, we also note the 10,680. To the upside, and should the bulls take over and reverse the index's price action, we may see it breaking the 11,515, which served both as a resistance as well as a support line, and start actively aiming, if not reaching, the 12,090. I know it's a wide rise and a wide drop, but the wide drop, which was evident on the 28th, more or less could imply that such volatility could be present for the index. Let's have a look now at the USD index, which is also in the 4-hour chart. A rise of the index, practically implying some bullish tendencies here. Note how the RSI indicator has reached the level of 70, confirming the bullish sentiment of the market, or indirectly. I would expect the price index to maintain a bias for a sideways movement between the 105.55 and the 103.20. Now, for our bias to change in favor of a bullish outlook, given the upward movement, I would require clear breaking of the 105.55 and for the price action to start actively aiming for the 107.50. Other than that, let me delete this. Should the bears take over, we would expect the price action of the index to break the 103.20 and start actively aiming for the 101.30. Note how the S2 provided support around the last days of May. Okay, let's have a second look now at EUR/USD. EUR/USD, which has moved decisively lower. So we tend to maintain a bearish outlook here, as long as the price action remains below the downward trend line, which has started to form since the 28th of June once again. Let's correct now the prior support line, which has been broken, now turns into a resistance line. Sorry. Let me correct this. And let's go find a new support line. Even lower. The pair has not seen such low price action for a very long time. Okay, let's move to the weekly chart. Specifically, that should be since 2002. That's a 20-year low, people. If it's been confirmed, let me readjust this. Actually, it is. No, there was another touch in 2016. So we're talking that the price action is currently at a 6-year low. Now, in search of the third support line, we will have to go back to 2002. And we may see the price action dropping somewhere here in the weekly chart, but that's too close to the S2, and it's also too close to the price action for a new in the 5. Lower. It is. Here we have it. This is the last touch, and that was on December 8th, 2002. It's the weekly chart. I don't know how relevant this actually is after 20 years, but yeah. Let's readjust this. So a new resistance line, highest resistance line is now placed at 0.75, 1.0755. Note how it provided resistance. Practically, it was an upward boundary of the sideways movement of the pair from the 23rd of May until the 10th of June. The next level would be the 1.06. Lower than that, we have the 1.0480. Is the first resistance line to the downside now, and moving to the first support line, we have the 1.0355. Lower than that, we have the 1.0210. And even lower, we have the 1.06. Let me adjust this first. Let's color this into green. 1.00670. That's it. Note how the pair is currently trading at quite low levels. It was last revisited, this level was last revisited in May 12th, 13th, 14th. Let's have a look. 12th to 13th of May, and actually here it's the 16th of May. So from the 10th to the 15th of May, this price action and this price action once again. And finally, we're entering once again the same area where the 1.0355 provided support. So we highlight this level as the first support line. Lower than that, we have the 1.0210, and even lower, we have the 1.0070, which, mind you, had its last touch around 2002, 20 years ago. We tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line. Also, please note that the RSI indicator remains near the reading of 30, implying a rather bearish sentiment for the pair. I would also note that the price action stabilized somewhat during today's Asian session as it broke the lower Bollinger Band, yet as the Bollinger Band has crossed below it, there has been new room for the bears, and the pair seems to be dropping once again. Should the bears take over, once again, we would expect the price action to break the 1.0355 and start aiming for the 1.0210 to the upside. And should the bulls take over, as a first signal of a changing trend, we would expect the price action to break the pre-mentioned downward trend line, break the 1.0480, and start actively aiming for the 1.06 R2, which provided resistance once, twice, 3, 4 times, 5 times here. So it's a pretty valid level and should be taken notice of. Other than this, is going to be mostly practically all the way down. Let's have a second look now at GBP USD cables for our chart. Cable which has moved lower, breaking the 1.2175. Let's reverse this into from a support to resistance line as the price action has broken below it. And let's go hunting for a third support line. Daily chart. Okay. So we have some price action here. Let's readjust to the forward chart. I would be noting this level, a little bit lower. Yeah. You have a touch on the downside as a support line. You have a touch as a resistance line. Okay. Let's clear the other levels. Readjusting. 1, 2. Readjusting also the labels. Starting with 1.2470, moving to the 1.2325, and then to the 1.2175, which has been just broken, and from support now turns into a resistance line and marks the end of the resistance lines in our charts. Let's go to the support lines. We make a start with S1 being at 1.2070. The S2 being placed now at 1.1935. And the final support line, let's see where it stands. It would be at 1.1815. That should be it. Now, we make a start in our technical analysis about the recent price action of cable. We would note that there was a clear downward motion of the pair, which has broken practically the 1.2175 support line, now turned to resistance. On the other hand, we have to note that the price action seems to show some signs of stabilization. It's characteristic that the downward motion, which provided a slight downward trend line, the trend line has been broken. So we tend to imply here that the pair may stabilize between the 1.2175 and the 1.2070. It's a possible sideways bias. On the other hand, though, please note that the RSI indicator remains pretty close to the reading of 30, implying rather bearish sentiment. Also note that the price action stabilized after hitting the lower Bollinger Band. Now the Bollinger Band has moved, lower Bollinger Band has moved decisively lower, and there is a gap between the price action and the lower Bollinger Band, which may allow for the bears to regain control somewhat. But for a bearish outlook to be maintained, we would require a clear breaking of the 1.2070 and for the price action of cable to start aiming for the 1.1935. Other than that, for the time being, we maintain a bias for a sideways movement between the 1.2175 and the 1.2070. Should the bulls take over, we may see the price action rising, breaking the 1.2175 clearly. That would be a first sign of attendance of the bulls, and the price action may continue higher, start aiming for the 1.2325, which used to be an upper boundary of the pair's past sideways movement from around the 21st of June up until the 28th. So for the time being, though, the big picture seems to show some stabilization between the R1 and the S1. However, bearish tendencies are quite possible and should not take us by surprise, which may lead the pair below the 1.2070 and for the price action to start aiming for the 1.1935. Let's have now another look at USD-JPY. USD-JPY, which has risen and retested the 136.75 resistance line. Mind you that this should be a 20-year high. Let's have a look. 24-year high. It's allowed by the chart. Okay. Anyway, the chart which we have back in the research office allowed us to go further back, and we were able to reaffirm that this level has not been reached since 1998. Now that would practically force us to reverse the role of the 135.60 from a resistance line to a support line, as the price action has now turned decisively higher. And we're going to be readjusting this level at 139.50, actually 140. Red, please. So let's readjust the levels once again. And 38.30. And 36.75. $135.60, 134 is the second support line, and the final support line now lies at 133. So we see the price action of USD-JPY remaining in a rather sideways motion with lows and peaks, and that's since the 17th of June. We tend to maintain a bias for sideways motion between these levels, the 136.75 and the 134 second support line, with the S135.60 being a mid-level. Note the peak here. Overall, though, once again, the sideways motion seems to be prevailing, And the pair has revisited the 24-year high at 136.75 and has started to slowly but steadily correct lower. Should the bearish momentum be continued, actually the sideways momentum be continued, we may see the price action dropping below the 135.60 and start aiming for the 134. Now for a bearish outlook, and here we have to note also as the possible R4, the 131 point, give me a sec, 100 in green, that would be the 131.50. Should the bulls take over, we may see the price action breaking the 136.75 clearly, start aiming for the 138.30, while on the flip side, should the bears take over, we may see the price action decisively move lower, breaking the 135.60, reaching, if not breaching, the 134, and the price action starts to aim for the 133, if not the 131.50. On the other hand, we should note that the RSI indicator is still above the reading of 50, implying some slight bullish tendencies for the time being. Okay, let's move into another safe haven, and that would be USD CHF, which seems to be bouncing somewhat, but overall the downward motion seems to continue. I would require more from USD CHF to actually switch my bearish outlook in favor of a sideways movement initially. Yes and no. Okay, for the time being though, we're forced to switch it. Note also the RSI indicator which has moved decisively higher and has reached the level of 50. So for the time being, yes, we tend to switch our bearish outlook for USD CHF in favor of a bias for a sideways movement initially between the 0.9640 resistance line and the 0.9550 support line. However, should the bears retake the initiative over the pair's direction, we may see it breaking clearly the 0.9550 and start actively aiming for 0.9455 to the upside. And should the bulls take over, we may see the pair breaking the 0.9640 and start actively aiming for 0.9765. For the time being, given that the downward trend line guiding the pair, and that's since the 23rd of June, we switch our bearish outlook in favor of a bias for a sideways movement between the 0.9550 and the 0.9640 at the initial stages, albeit I suspect that should there be a sideways movement, that may prove to be a little bit narrow ranged. We'll have to wait and see here. Let's have a look now at gold's price. Gold's price, which continues to move lower, but in a more hesitant way. Even the small outburst, which was noted yesterday, you can see the shadow here, failed to even reach the downward trend line. So we tend to maintain a bias for a downward movement of the precious metal, which could probably break the 1807 by tomorrow, if not Monday. On the other hand, should there be a stabilization, we may see it bouncing and stabilizing around the current levels, just above the 1807. To the upside, should the bulls take over, we would require clear breaking of the downward trend line and the 1836, aiming for the 1870 for a switch towards a bullish outlook. Should be so. Also note the RSI indicator, which remains below or between, if you prefer, the readings of 30 and 50, implying rather bearish sentiment of the market for the precious metal. Let's have a look now at WTI. Okay, it's been a while. Let's readjust these levels here. So we have nice confirmation of the 107.55 as a support line now this time. Let's turn this into green. Let's place the new resistance line to this touch here. Also note the support provided here, the resistance here and here. This is valid. Let's keep this. And it's going to be at, in red please, 116.30. Let's widen this a little bit. There we go. Second resistance line. First resistance line. First support. Second support. And third support. Now let's correct the labels. Sorry. Let's make a start from bottom moving upwards. S3 now being placed at 101.25. S3, sorry. S2 now being placed at 105.10. S1 being placed at 107.55. Goes beautifully tested once again today. The first resistance line is being placed at 110.85. The second resistance line is being placed at 113.80. And the final resistance line is going to be placed at 116.30. So, for the time being, we seem to have a bearish movement. The RSI indicator, though, remains pretty close to the reading of 50, implying a rather indecisive market. Also, the price action seems to have tried to break the S1 107.55, however, was unable to clearly do so and retreated a little bit higher. So we may see some stabilization for the precious metal. On the other hand, for its prices. On the other hand, the intense downward movement of WTI's price tends to provide a predisposition for a possible presence of the bears here. And should the bears actually take over, we may see it breaking the 107.55 and start actively aiming for the 105.10, if not even lower, given the high volatility presented for the commodities price yesterday. Quite interesting. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Metals are a good portfolio diversifier and extremely popular financial products which traders can use to hedge against inflation. Although gold and silver are considered the most popular metals, there are other ones including platinum or palladium, which are commodities that can be easily added to an investor's portfolio. Metals have various applications including jewelry construction, electronics, or medicines. Traders usually get into metals trading by speculating on the price movement of metals through CFDs, which means that they do not have to own the underlying asset. Gold is the most widely traded commodity around the globe and the most popular precious metal. Political, social, or economic instability are some of the factors that can cause fluctuations in gold prices. Similarly, silver is another valuable investment option, which is easily accessible to many investors worldwide due to its low price. Unlike the forex market, both gold and silver are considered safe haven assets as their prices are not always impacted by interest rates or governmental decisions. In fact, they are commonly used to hedge against volatility in the USD as gold prices often increase together with inflation rates and a depreciating dollar. Gold, for example, tends to hold its value when other markets' prices fall. That is why many traders turn to metals trading during periods of market uncertainty to balance out potential losses. Moreover, adding gold to your investment portfolio can help you diversify it and potentially reduce risk. Supply and demand is an important factor that affects the price of precious metals. The more the need for metals, the more valuable they become. For example, if there is an interruption of the production in a silver mine due to a strike, it is possible that silver prices will increase in the short term and vice versa. How strong the US dollar is also affects metals prices, as they are mainly dollar denominated, hence very vulnerable to fluctuations in the USD.
Hello everyone, my name is Emily and welcome to our daily trading tips. When you're about to begin trading, the best thing to do is start small. Choose only a couple of trading instruments, familiarize yourself with their past price action, and make sure that you perform technical analysis on multiple time frames. Also, familiarize yourself with their fundamentals. For example, if you're about to trade Amazon, have a good look at what the latest developments are for the company, but also what events lay ahead that could affect the share's price. Your aim is to eliminate the surprise factor as much as you can. You don't have to risk a high amount. Keep the risk minimized by investing low initially, and don't forget to set up a stop-loss order and a profit-taking level. Your aim should be to learn and familiarize yourself with trading, but at the same time to preserve or even increase your capital. One of the best strategies to develop when you're trading is figuring out your best entry point. In most cases, the trader will observe that their entry point could have been much better if the proper circumstances were in place. So what are the best circumstances for identifying the best entry point? We suggest the trader accurately identifies the trend line of the asset working with technical analysis and at the same time use a reliable fundamental story that could act as a foundation for the idea to materialize. This can be economic data of a currency or a company, commodity, or simply a booming industry that has chances of growing substantially in the near future. If the trader can choose the entry point strategically, there is a way to minimize actual risk of the trade with an equivalent stop loss not far away from the opening. Working with this strategy will require patience and persistence, as it is rather difficult skill to develop, but tends to pay extraordinary returns when utilized properly. I want traders to take a moment and consider what their strong points and what are their weaknesses in regards to trading. Let's say you've been trading for some time and it's finally working out for you. The question is, what can take you basically to get to the next level? How can you create a breakthrough for yourself as a trader? One of the things that good traders tend to do is identify what their superpower is. Are you a natural seller or are you a buyer? Are you better at trading stocks or gold? Knowing what you're good at and how you can further improve is what you need to transform yourself. Always keep in mind the work you put in a day and day out will determine who you will be in the future. So do the work and stay positive. Thank you so much for joining us, guys, today, and stay tuned for our tomorrow's live. Bye-bye.